for anyone that's trying to build the data stack that where you're feeding in data directly, a couple of bits of advice, because we speak to vendors all the time. The first is that there is a huge spread in cost. So there are vendors that will sell you the same bit of data for like 50x what another person will. There's huge different data quality in the coverage, so it's always really important to ask where the data comes from. And once you know where the data comes from, you will have a far better understanding of where the gaps are and the likely quality, which you can then communicate to your end users, most probably the internal investment teams.
Hello, everyone. Welcome to another edition of the Sourcing Stack podcast. Today's guest is someone who is helping redefine what venture capital looks like in the age of AI and data. Peter Mitchell is the Director of Data Science and Technology at Future Planet Capital, an impact-led venture capital firm with over 570 million assets under management and over 300 plus investments. They are investing in high-growth companies emerging from the world's leading universities and research centers. Future Planet backs founders tackling some of the world's biggest challenges across climate, health, education, security, and sustainable growth. Peter brings a unique perspective to venture investing. Before entering VC, he completed a PhD in educational statistics at the University of Oxford, and today he leads the development of DataLace, Future Planet Capital's proprietary intelligence platform that's transforming how the firm discovers, evaluates, and supports exceptional founders. Future Planet has always believed that great investing combines human judgment with better idea. That philosophy is reflected in the way the team has built a technology-driven investment process, combining proprietary tools with global market intelligence to identify breakthrough companies earlier. Peter, it's a pleasure to welcome you to the Sourcing Stack podcast.
Likewise. Thank you very much for having me.
Excellent. Now let's jump into the podcast questions. To start with, data-driven venture capital. Future Planet Capital has been investing with a data-driven approach for several years now. Mm-hmm. What first convinced you that data and AI would fundamentally reshape how venture capital firms discover and evaluate companies?
Good question. So our conviction has kind of grown over the years. Initially, it was driven by, operational challenges. Our investment teams were going across the world, meeting different managers in different university ecosystems, and there were simply just too many deals for us to manage at one point. What we were finding is that the most pushy managers or the founders that were sending us the most emails were getting most of our attention, and that was meaning that we were going to miss some of the great deals who either were fully subscribed or where the rounds needed to be fought for. So just having all of the information in one place at one point where we could look at the whole pipeline and feel comfortable about which of those had the best predictive signal or was most worth our time, operationally was a big unlock, and I guess helped the team to believe in the approach. A couple of years later, what we did at the initial point when we were evaluating this pipeline is we made scores for all of the opportunities. We ranked them from 100 to 0, 100 being the best, 0 being the worst. And we saved the first set of scores that we ever made and continued to improve them as we went along. 2 years after we did those first scores, we analyzed them and found that the companies that had gone on to either have up rounds or exits were almost uniformly in the top quartile of our scoring system. Those that had gone on to die or had down rounds were uniformly in the bottom quartile of our scoring system. And so our conviction grew further with the idea that we could segment our universe, allowing us to focus our time on the opportunities that we had that had greatest promise. Obviously, in the more recent times, LLMs have changed things again. The operations are even better. We can ingest even more text. We can do even more interesting things with the numbers that we have at our fingertips. And more broadly, we can build tools faster. So it's kind of layers of conviction as we're seeing the venture ecosystem adapt and change to the new reality that we're facing. So I have even more conviction than I had when I started, that the way that venture capital operates is fundamentally changing, is going to end up at a place that is radically different to where it's been historically.
Mm-hmm. Very great insight. I mean, as your deal flow grew, it became impossible for any team to manually review every opportunity, and the risk of missing exceptional companies simply because of volume was very high. I mean, data and AI became a way to ensure that promising founders didn't slip through the cracks. Very interesting. Now, that actually brings me to the next question. Building data lakes. Right? Yeah. Data lakes has become a core part of Future Planet Capital's investment process. Could you walk us through the journey of building it and how it has changed the way your team sources and evaluates opportunities?
Yeah. So the nice thing about data lakes is that it started out very small with a tiny budget, really me working 2 days a week whilst finishing my PhD. Essentially, I was given a spreadsheet, which I think lots of small funds have. At the time, we were only managing $20 million, so there wasn't a huge budget to go around building out a big tech stack. The team had made some kind of basic formulas where you input some data and it would give scores 1 to 5 on various different metrics, sum up those metrics, and then you could prioritize the companies accordingly. My task was to take this, to turn this into code. So I wrote lots of Python code to formalize this, to ingest lots of data, which is where Tracxn comes in, and to expand the total number of companies, which is where our efforts with sourcing. So we did that, but the first iteration was literally download lots of data from Tracxn, put it in a file, run a Tracxn script on our computers that would take all of those informations on the very different files and essentially make the same Excel, but just with more data, better formatted, more logic, or kind of clearer logic in the scoring system. From then on, it went various different iterations, each with slightly more cost as we got bigger and bigger and bigger and our fundraising and fund size scaled. We moved to Google Sheets, so we'd push everything in Google Sheets, which is free for all of those that don't know. You then could add like little bits of interactivity on the Google Sheets. If you change something on the Google Sheets, it would then change something on the scoring system. We then moved the entire scoring system onto the cloud. We bought a front end. We then built a front end. But all of these are kind of incremental steps, all stemming from this core proposition, which is broadly the same today, that every company, when it comes into Future Planet Capital, we should collect every single data point that is publicly available or is able to be bought. We should compare it across the entire universe, which obviously is something that humans can't do. And then we should make sure that we focus our attention on those which, all things being equal, seem to have the greatest promise. So there's a kind of series of adaptations and improvements that ultimately are going after the same aim, which is spend your time on the things that have the most predictive signal rather than those that are immediately in front of you, which is human tendency to do.
It's fascinating how many great systems, how actually many of these great systems start small. Like what began as a few formulas to help screen and rank companies gradually evolved into a sophisticated tech stack. And as more high-quality data became available, including Tracxn data, it made it much more easier and possible to build much richer picture of every startup, bringing together everything from market signals to company fundamentals in one place.
Yeah, and that's not unusual. I mean, if you look at EQT's Motherbrain, if you look at some of the stuff that Google Ventures has done, I guess the message to people that want to build this is like, start small, don't feel intimidated, and it will just As long as you keep working at it, it will get better and bigger and more sophisticated and more fine-tuned as you go on. Start today.
Right. Now, that brings me to the next question. The future of venture capital. As someone working at the intersection of venture capital, AI, and data science, how do you see the investment process evolving over the next 5 years?
Sure. So right now, I'm in a fortunate position where I talk to lots of peers at top firms, both in the UK and the US, that are doing similar things to me. At the moment, what seems to be happening is that lots of people are building better operations. So lots of operational efficiencies internally are being improved. There's lots of work being done to make sure that hot deals are found in a timely manner and that there is full sector coverage, whatever that coverage may be. Increasingly, I suspect that will become commoditized. What is being happened at one firm is not radically different to what is being done at the other. It's essentially get all your LinkedIn, get all your WhatsApp, get all your different market data providers and aggressively target deals with certain characteristics. Obviously, some people will have an edge on what types of data is collected, particularly relative to your thesis. But ultimately, let's assume that anyone that wants to be found, anyone that wants to create a digital footprint, off-the-shelf tools eventually will find you. So then what happens is that the VC's job is to start to, much like a public market equity investor would, decide what types of signals and what types of characteristics you would like. And so you can actually start to pick or target startups in much the same way that a public equity analysis would pick stocks with certain characteristics. And there would start to be a kind of more split amongst VCs on style. I like this type of style because blah, blah, blah. It's appropriate for my stage, my sector, etc. Similarly, it's not just the digital footprint of founders and their companies that's going to be increasingly accessible, but of the venture firm and indeed the partner. So for the very hottest deal, I suspect that there will be more and more tools, knowledge, reviews, etc. from founders in demand about who the best people to partner with. And so lots of the marketing around demo days and branding of the big VCs is going to shift into something akin to seller reviews on Amazon or far greater transparency from both sides about what makes a good company, what makes a good investor, and then the tech stack will be about joining up these two things. Much like you can imagine, you clone me, you clone the company, and we talk and then decide, is this a fit? No. And you can imagine that kind of automating. Eventually, however, humans are going to meet. And at the point at which they meet, that is where all of the human traits of, I don't want to say ego, personalities, vision, communication styles come into play. I think it's going to take a lot more than 5 years for that to be wrung out. But ultimately, if you again look to the public markets, quant hedge fund investors don't invest on whether or not the hedge fund manager gets on with the founder of Apple or Cisco or whoever. They invest because the fundamentals. So I do eventually see us getting there, but not in 5 years.
Right. Now, human judgment versus AI. AI can process enormous amounts of information, but venture investing has always relied heavily on human judgment. How do you see those two working together at Future Planet Capital?
Yeah. So I think it's worth stressing what the relative strengths are of computers and humans today. So today, what computers have is breadth. They can look across 10,000 deals or 10,000 companies and accurately compare all of those across certain metrics. The challenge is that until fairly recently, we only had 10 to 30 metrics on each company. And that each of those, even with all those 30, you still didn't have a full picture of the company. You had a better picture than you would otherwise, but what you lacked was depth. So hence why we use the breadth to do the filtering before we do the depth, and that depth DD to to actually pick from a list of 10 or 15 companies that look similar. The question is, when is generative AI, or when is the digital footprint of a company going to be deep enough that the LLMs are better at the depth part than humans? And that is not impossible to envisage, but it would require the company to actively allow venture capitalists into their OneDrive, into their emails, into their WhatsApps, into a lot of data access into them, so that the computer could process enough. At the moment, we still need to have a conversation, have a transcript in order to make a big enough digital footprint in order for the LLM to process it. So at that point at which the depth happens, then the humans really do become just relationship people, relationship facilitators. But I think we probably have a way to go. So what I still envisage is that the LLMs do the screening and the breadth, they help with the operations, and then the humans do the deep dive into the company, and also potentially data creation that allow the LLMs to check their homework. But that will again continue for a while.
Right. Very, very interesting perspective, I must say. I mean, the breadth and the depth of the data. I mean, the difference basically. I mean, only when the company's digital footprint is really good, LLMs come into picture. That's an important distinction. AI gives you incredible breadth. It can scan thousands of companies, signals, and data points far faster than any human team ever could. But depth still matters.
Yeah, and I suspect that people will soon elect to give that machines depth. But watch this space. No, I suspect if I really want to be funded, I'll let you have some kind of vectorized version of me, so that your systems can analyze me and who I am and how I engage, looking through all the meeting notes that I've ever had, looking through all of the Outlook, etc., to model my behavior, and that will be the next frontier. But we're probably a way away from that at this point.
Right. Now, moving on to the next question. Discovering exceptional founders. Future Planet backs companies emerging from some of the world's leading universities and research ecosystems. Beyond the technology itself, what qualities consistently stand out in the founders who go on the build exceptional companies, like who go on to building some exceptional companies?
Sure. So some of the big predictors that we look for is slope. So what we want is people to have done things exceptionally well, exceptionally fast in their previous work experience, personal life, etc. So we want people that have been promoted rapidly, ideally people that have done different things, or at least reasonably different things. When people tend to do one thing incredibly well, they often risk being rigid. And so we ideally would want someone that has done lots of different things exceptionally well, been promoted rapidly, and done some weird things. Like the example we look is like, you went to the best university, you got the best mark, you got into a really competitive grad scheme, you got promoted 3 times, and then you went and became a salmon farmer in Chile for 2 years for some random reason, and now you want to do a salmon business. Like, that is ting, 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 gold star. Because you've got all of the drive, but you also clearly have the risk-taking ability that you don't really care what people are going to say, because clearly you should have stayed at your high-powered job and got promoted even faster. And you do weird and wonderful things which suggest you have an interesting way of thinking about it. The other thing is grit. So I really like it when people have failed at things too and bounced back. So like examples of failures and how quickly they bounce back, how they respond to that. And then finally, hiring. We always want to know, who have you personally convinced to be on your journey with you? And ideally, they should be quite unlikely people to be able to convince. And that's not just about convincing brand names. You see lots of things of, this professor that wrote XYZZZ is on the advisory board. That's great. What I would prefer is that you were getting promoted rapidly at Microsoft, and you convinced someone who was also being promoted rapidly at Apple to be your CTO, because that person arguably has given up more. They've given up their huge pay packet and share award in Apple to join you, and that's a big loss. So they must really believe in you and what you're building. So slope, grit, and hiring great people.
Great. It's a very interesting perspective, especially on the people's background, the experience, the alumni status. Very, very interesting. Now, AI and competitive advantage. As AI becomes increasingly accessible, many products will begin to look similar. In your view, where will the real competitive advantage for AI companies come from over the next decade?
Sure. So controversially, I think that lots of the moats will actually at the core be the same. Same for previous software companies. They'll just express themselves in slightly different ways. So we've already heard about data moats, so that your LLMs or small language or even the smaller models can train for a specific use case. Energy costs may well be a big thing, particularly if they're not solved by more efficient software. That really is just like cheaper, lower cost equivalency. Hardware upon which the action the LLMs take is, so robotics, you're seeing a boom. Ultimately, some action is going to need to be taken by the LLMs, and often that action will be in the physical world. Those people that can translate the action into the input into an action and create some kind of feedback loop that improves the model. You could imagine some kind of moat there. Community, so like having lots of people use the thing, and if that usage means that it is better, either because there's a kind of forums or things like that, and then distributed channels. You have the right channels for the right partners, and you get entrenched. We all know how painful it is to switch over from IT systems. So there may be a little bit of first mover advantage, assuming that there are real transaction costs. And then we don't really invest on it, but brand and things like that, I don't think that's going away. No. Ultimately, if everything's similar, being in the right cool club could well be helpful. Again, something I'm not super familiar with, but I do suspect that there are going to be cooler AI companies and less cool ones, and that will make a difference.
Right. Now, data ecosystem. Future Planet Capital has built a powerful proprietary capabilities through data lakes, while also leveraging external market intelligence platforms like Tracxn to support company discovery and market research. How do those different sources of intelligence complement each other in your investment process?
Yeah. So for anyone that's trying to build the data stack where you're feeding in data directly, a couple of bits of advice, because we speak to vendors all the time. The first is that there is a huge spread in cost. So there are vendors that will sell you the same bit of data for like 50x what another person will. There's huge different data quality in the coverage, so it's always really important to ask where the data comes from. And once you know where the data comes from, you will have a far better understanding of where the gaps are and the likely quality, which you can then communicate to your end users, most probably the internal investment teams. Finally, we also talk a lot about the partnerships, because chances are you are going to need your data vendor to do something at a given point. That's where Tracxn has been fantastic. So wherever we've needed them, they're at the end of the phone line immediately. When we've needed flexibility, for example, there were points at which we were considering licensing some of our technology to external partners. They've demonstrated extreme flexibility in our own contracting and how we work together. So building out vendor relationships where it's a two-way street. Yes, you pay them, but that you also can give something back to them and they can help you in return is really, really helpful. Without listing all of our data vendors, Some of the particulars that we focus on is good coverage in the sectors that we want. So I always ask, can you find a company that I'm just looking at? We want breadth, depth in the particular customers. We always want founder information as well as company information. Market sources is a different bit of information, and we don't necessarily use LLMs directly for some of those market sourcing because we found they've been inconsistent or lacking. Yeah. Again, if anyone wants to talk to me about the different sources, please just reach out on LinkedIn. I'm happy to wax lyrical about where good data is at the moment.
Thank you, Peter. I really appreciate you sharing that, especially as someone from Tracxn. I think it highlights an important point. Building a world-class investment platform isn't about choosing between proprietary tools and external intelligence. It's about combining them. Platforms like Tracxn provide high-quality, structured market data at scale, while Data Lace enriches that with Future Planet's own research, scoring, and investment framework. Together, we create a much more complete view of an opportunity than either could on its own. So fantastic.
I would highly recommend Tracxn, and I'm not just saying that because they have me on the pipeline on the podcast. Genuinely a great partner to have.
Thank you so much. I appreciate it. Now, investing in global challenges, Future Planet invests across climate, health, education, security, and sustainable growth. When you look across these sectors today, which areas excite you the most and why?
Sure. So in our world, security and modern industrial strategy, which really is at the moment compute, quantum, are getting a lot of attention, and for some good reasons. There are obviously lots of tailwinds, large funding rounds, great investors and founders going into them. But I won't talk too much about them because I suspect most people already know that. The two less appreciated sectors is climate and education. So what we're seeing is that lots of climate companies are rebranding them as like national resilience or national security companies, and actually pushing forward with what would otherwise be a very clear climate agenda, despite all of the negative press, particularly in the US, around climate, ESG, sustainability. So I think there are lots of good companies making headway, particularly where they offer customers cost savings, which lots of climate solutions do. The second one, which I think is poised for rapid expansion, is EdTech. With LLMs, the way that we educate children is going to radically change in the next 5 to 10 years, with us now able to offer personalized education at a fraction of the cost that we previously did. So lots of these tools that we can now provide are going to be huge and likely to be relatively global, which is unusual. Most EdTech companies have been national in nature. And I suspect that the next wave will have big champions where they can scale those national borders and offer, whether that's tutoring or help with teachers in the classroom, where you have this really nice mix of in-person hybrid classes and personalized learning to support and catch students with any misconceptions or challenges that they might be having. So I think schooling and the school system is set for a radically better solution, which hopefully can be spread quite quickly and ideally cheaply.
Great. Now, I see a trend in Europe, like a lot of defense companies raising large funding rounds, and also some of the VC funds are launching defense-focused funds. Do you also see that change in Europe?
So we run the Ministry of Defence's venture capital fund. So we are directly investing into defense startups here in Britain. Obviously, following the US government's decision to pull back slightly from their commitments to European defense, European governments have been stepping up and increasing money and investment both into the armed forces directly, which offers a bigger customer base for lots of tech, but also directly into the supply chains of those armies nationally. So there are lots and lots of green space, green fields for defense tech companies to operate in. Similarly, following the Ukraine and Iranian conflicts, the way that war is waged is rapidly changing, and that is being brought starkly to our awareness in a range of different areas. Obviously, the obvious one is drones and what the Ukrainian army has used to effectively defend themselves against an adversary that's multiple times larger than they are, with great effect. But even the US-Israel-Iran conflict recently has shown that if you can get cyber right, you can very effectively target high-ranking military officers and indeed civilian officers with precision strikes in a way that previously would have been nigh impossible. The CCTV system for Iran was hacked with key figures targeted very precisely. So the ability for cyber and that kind of world to play into a direct conflict has very clearly been demonstrated, as has drone warfare. So this kind of moving world has opened huge opportunities.
Great. Peter, thank you so much for joining us today. It's been a fascinating conversation. I think one of the biggest takeaways is that while AI is transforming venture capital, great investing is still about combining technology with sound human judgment. We've also heard how proprietary platforms like data lakes, complemented by trusted external sources like Tracxn, can help investors discover opportunities faster and make more informed decisions. Most importantly, the fundamentals remain unchanged: back exceptional founders, solve real problems, and stay focused on long-term value creation. Thank you for sharing your insights and experiences with us. It's been a pleasure having you, and we look forward to seeing how Future Planet Capital continues to shape the next generation of breakthrough companies. Thank you again. And for everyone watching this podcast, thank you so much, and we see you in the next podcast. Thank you, Peter.
Thank you very much for having me.